Hi, this is Darren from Macquarie Warrants, here to share with you the market action we saw this month and what warrant investors can look out for in the next 2 weeks. As global economies work towards loosening lockdown measures, the rebound in global markets in the month of April seemed to indicate growing confidence. In the US, investors bought into the US S&P Futures Index in the month of April to take the index 26% higher from its March low. This rebound takes the futures index just 18% shy of its record high of 3,400. Over the past few weeks, investors appear to shrug off weaker earnings reports from US companies. Notable reports include those from financials with Bank of America, Wells Fargo, and JP Morgan all posted a sharp decline in earnings and higher loss provisions from rising loan defaults. And what to watch out for next in the US? The first quarter GDP and US Federal Reserve's rate decision will be due for release this week. This follows the Fed's unexpected 1% cut in rates to a 0.25% target range on 15 March. The stretched consensus is for the US to keep interest rates unchanged till 30th April. Should you be interested to trade the moves in the US, you may consider using call or put warrants tracking the S&P Futures Index. Call warrants move together with the stock or index they track, while put warrants move in the opposite directions. Calls are therefore suitable for those who think the stock or the index may go higher in the short term, while puts are suitable for those who think that the market may head lower in the short term. Check out the current trending warrants with high liquidity, on tight spreads, and provide the best sensitivity. The effective gearing figure in the table refers to how much more the warrant may move in response to the moves in the S&P Futures Index. In this case, if the S&P Futures were to move 1% higher tomorrow, the trending call warrant in the table can be expected to move 8.2 times more or 8.2% higher. However, note that gearing works both ways, which means that if the S&P Futures move 1% lower, the same call warrant will go down by 8.2 times or 8.2% lower. In Singapore, the Straits Times Index is comparatively more subdued than the US market, adding just 1.5% month to date. The subdued SCS performance may be attributed to modest gains in the local banks, as the local banks and oil names are inevitably hit by oil prices plunging further. Like the US banks, the three Singapore banks are set to see rising credit costs as more borrowers struggle to repay their loans. Hin Leong, the oil trading firm that has filed for bankruptcy protection, is amongst the notable borrowers, owing the three banks an estimated $600 million collectively. However, according to analyst estimations from Bloomberg, the upcoming first quarter results may be relatively unaffected by current economic conditions. Investors keen to trade the short-term volatility in all three local banks that may come during this earnings period could consider the following trending warrants. After rebounding by as much as 17% from its March 23rd low, DBS has struggled to trade above the $20 mark and is currently trading at its lowest level in 3 years. Just a year ago, DBS has posted a record first quarter profit, while its full year profit in 2019 was in line with expectations. DBS is the most exposed to Hin Leong's collapse, with a loan exposure of $290 million. UOB, which has performed similarly to DBS since March, is currently up 0.6% this month. Of the three banks, it is relatively less exposed to loans from the oil and gas industry, with those loans accounting for only 2% of its total loans. Finally, OCBC, the worst performing of the three banks, recorded a mere 0.1% gain as of 24th April. The last time OCBC had traded below the $9 mark as of now was in December 2016. When the bank announced its fourth quarter earnings 2 months ago in February, it was the only bank that managed to keep its interest rates unchanged, an area which both DBS and UOB reported declines. Its exposure to Hin Leong is around $220 million. Did you know that structured warrants mentioned above are all listed on the SGX? Here's how to recognize them. In this example, we have a warrant over the Hang Seng Index Futures. Breaking it down, we can see that the first three characters is the underlying assets code, and is followed by the warrant strike price and the issuer's code. Next, we can distinguish that as an European-style call warrant by ECW and a put warrant by EPW. For the last 6 digits, it states the warrant's expiry date in a year, month, date format. To trade structured warrants, you can do so via your online trading platform the same way you trade shares. For more details, click on the link in the description below or feel free to contact us at our warrant hotline. Lastly, don't miss out on the next video on exciting warrant news by subscribing to our channels on YouTube, Telegram, and Facebook.